Everyone wants to become a successful trader, but very few ever reach that level of consistency, discipline, and emotional stability. Most traders enter the markets believing that success comes from strategies, indicators, or secret patterns. They think that if they study enough charts, memorize enough formations, or watch enough tutorials, they will find the key that unlocks never-ending profits. But trading does not reward the one who knows the most technical information. It rewards the one who knows how to control their mind. Every consistently profitable trader has something in common. They have built a mindset that allows them to stay calm when the market becomes chaotic, patient when the market becomes slow, and focused when emotions begin to rise. Today, you're going on a deep journey inside the mind of a winning trader. You're going to learn how professionals think, how they behave, how they react, how they recover, and how they outperform the large majority of traders who come and go from the market every year. If you've ever wondered why you repeat the same mistakes, why you jump into late entries, why you let losses run but cut wins early, why you get emotional, why you break rules, or why you sabotage yourself, the answer is hidden in your psychology. The market doesn't defeat you. You defeat yourself. And once you see this clearly, you can begin to transform. The first thing you must understand is that trading is not a battle against the market. It is a battle against your own impulses, fears, expectations, and emotions. A winning trader realizes that the market is neutral. It is not fair or unfair. It is not kind or cruel. It does not care whether you win or lose. It simply moves, and your job is not to fight the movement, but to follow it with discipline. A true winning trader is defined not by how much money they make, but by how consistently they execute their plan. A winning trader is someone who can see fear rising inside of them and still follow their strategy. A winning trader is someone who feels tempted by greed but stays disciplined. A winning trader is someone who accepts losses gracefully, celebrates mistakes as learning opportunities, and always focuses on improvement instead of perfection. Most traders believe success comes from winning trades. They judge themselves by how many trades they win, how big their profits are, or how quickly they grow their accounts. But winning traders understand a deeper truth. Percentage of wins does not make a trader profitable. What makes a trader profitable is the ability to follow rules, limit risk, stay patient, and think probabilistically. A winning trader knows that they might lose today and win tomorrow. They might have a red week and then a green month. They might go through drawdowns, sideways markets, consolidations, unexpected volatility, or news events that disrupt their plans. But through all of it, their mindset remains stable. They trust their edge, they trust their discipline, and most importantly, they trust themselves. One of the most important pieces of trading psychology is self-awareness. If you cannot see your own emotional triggers, you cannot control them. Many traders don't realize why they click the buy button when they shouldn't. They don't realize why they hold losing trades too long. They don't realize why they rush into positions at the worst possible time. But a self-aware trader watches their emotions in real time. They feel the fear, the excitement, the impatience, the frustration, and instead of reacting impulsively, they observe it. They understand it, and they choose their actions consciously. Self-awareness is like turning on a light in a dark room. Suddenly you can see your internal patterns clearly. You know when you are trading out of boredom. You know when you are chasing a trade out of FOMO. You know when you are increasing your lot size because you want to recover losses quickly. And when you can see the impulse, you can stop the impulse. Discipline is the heart of everything. Without discipline, no strategy works. The best setups become disasters. The best indicators become meaningless. The best analysis becomes wasted effort. Discipline means following your rules even when you are tempted to break them. It means respecting your stop loss every single time. It means never risking more than your plan allows. It means waiting for confirmation even when you want to enter early. Discipline is what separates consistent traders from gamblers. Emotional resilience is what keeps a trader alive in the long term. The market will test you. You will lose trades. You will lose streaks. You will experience days where everything goes against you. You will question yourself. You will feel the pressure build. But emotional resilience is the ability to bounce back quickly. It is the ability to stay calm when drawdowns come. It is the ability to trust your process even when results temporarily fall short. Most traders fail not because they lack strategy, but because they fall into psychological traps. One of these traps is the illusion of control. Many traders believe that with enough analysis, they can predict the market perfectly. They search for certainty where none exists. They think, if I study harder, I'll always know where the price will go. But markets do not reward certainty. They reward adaptability. Another trap is emotional trading. Many traders enter positions because they feel excited, impatient, or stressed. They exit because they feel fear or second-guess themselves. Emotional trading leads to inconsistency, and inconsistency leads to losses. Impatience is another trap. Many traders cannot wait for the right setup. They want action. They want movement. They want to feel involved. But patience is one of the most powerful traits a trader can have. The market does not reward the trader who is the most active. It rewards the trader who is the most selective. Revenge trading destroys accounts faster than anything else. After a loss, some traders become emotional, angry, or desperate. They jump back into the market with no plan, no clarity, and no discipline. They think emotionally, not logically. But the market is not something you can fight or punish. The market is indifferent. Revenge trading is a reaction to emotional pain, not to actual opportunity. Attachment to outcomes is another psychological trap. The more a trader wants to win a specific trade, the more emotional they become. They begin to overanalyze. They hesitate. They tighten stops too early or remove stops entirely. They let emotions distort decisions. Winning traders detach from outcomes. They understand that each trade is just one small event in a long series. The outcome of any single trade means nothing compared to the discipline of executing the system. Unrealistic expectations are one of the biggest reasons traders quit. Many traders believe they can double their account in a week, or turn a small deposit into a fortune quickly. They expect instant success. They expect to quit their job after a few profitable days. These expectations create pressure, and pressure destroys rational thinking. A winning trader focuses on long-term consistency, not short-term miracles. A major shift happens when a trader moves from amateur thinking to professional thinking. Amateur traders chase money. They always ask, how much can I make? Professionals ask, how much can I lose while still staying in the game? Amateur traders want excitement. Professionals want calmness and predictability. Amateurs want to avoid losses. Professionals accept losses as part of the statistical probabilities. Amateurs react emotionally. Professionals prepare mentally. Amateurs hope. Professionals execute. Amateurs judge themselves by single outcomes. Professionals judge themselves by the consistency of their behavior. To become a winning trader, you must master emotional control. Fear is one of the strongest emotions in trading. Fear makes traders close positions too early. Fear makes traders hesitate. Fear makes them doubt their strategy. Fear comes from risking too much or having unrealistic expectations. To eliminate fear, reduce your risk to a level where losses feel insignificant. Trade smaller, trade calmer, trade with clarity. When your risk is tiny, your mind becomes free. Greed is another emotion that must be controlled. Greed whispers, increase your lot size. Take more trades. Push harder. Greed leads to recklessness. The way to defeat greed is by creating strict rules. Maximum number of trades per day. Maximum risk per trade. Maximum daily loss limit. When rules exist, emotions weaken. Anger is extremely dangerous. Anger leads to revenge trading. Anger leads to impulsive decisions. Anger makes the market feel personal, when in reality, the market has no awareness of you. When you feel frustration rising, the best solution is to step away, breathe, reset, and return with clarity. The fear of missing out, FOMO, pushes traders to chase setups that are already overextended. They fear others are catching opportunities that they are not. The truth is simple. Opportunities are endless. There will always be another setup, but there may not always be capital if you keep chasing. Euphoria, the emotion after a winning streak, is even more dangerous. After success, some traders feel invincible. They increase their risk, ignore their rules, and trade carelessly. A winning trader treats every trade with the same level of discipline, whether they are on a winning streak or a losing streak. Winning traders develop habits that support their mindset. One of the most powerful habits is journaling. They write down every trade, the reason for entry, the emotional state they were in, the execution, the outcome, and the lesson. Journaling builds awareness. It shows patterns. It reveals mistakes. Another habit is focusing on one strategy at a time. Many traders jump from one strategy to another, thinking the next one will be better. But mastery comes through repetition. Professionals stick to one system, refine it, and truly understand it. Winning traders prioritize capital preservation. They understand that survival comes before growth. The trader who preserves capital during difficult times is the one who thrives when the market turns. They avoid trading when emotional. They take breaks when needed. They step away when their mind is clouded. They understand that mental clarity is more valuable than any setup. They think in probabilities. They know that no single trade matters. What matters is the outcome over hundreds of trades. This frees them from emotional attachment. They accept boredom. They know that most of trading is waiting. They don't seek excitement. They seek consistency. Now let's build your mindset consciously. Start with a written trading plan. Define your strategy clearly. Define your entry conditions, your exit conditions, your risk rules, your trade times, and your criteria for good setups. Clarity eliminates confusion. Use risk management that removes emotional pressure. Never risk an amount that makes your heart race. When your risk is small, your decisions become logical instead of emotional. Backtest your strategy. The more evidence you collect, the more your mind trusts the system. Confidence is built from repetition and data. Practice patience. Understand that waiting is not inactivity. Waiting is a skill. Waiting protects you. Waiting strengthens your discipline. Detach from the outcome. Evaluate your success based on following your plan, not based on whether a trade wins or loses. Train yourself to see losses as information. A loss is not a failure if you executed correctly. A loss only means that the probabilities did not align this time. Nothing more. Remove your ego. The market is bigger than you. The market is older than you. The market will still be here long after all of us. Ego has no place in trading. Develop healthy routines. Before you trade, review your plan. During trades, stay calm and focused. After trading, analyze your performance. Improvement comes from reflection. Rest when needed. Fatigue leads to bad decisions. Protect your mind. Stay consistent. Even when results fluctuate. Even when emotions rise. Even when conditions change. Consistency in behavior leads to consistency in results. Understand deeply that trading is not about predicting the market. It is about responding to it with discipline. You do not need to know the future. You need to know yourself. When you develop the mindset of a winning trader, everything changes. You trade less emotionally. You stop forcing trades. You stop chasing. You stop hesitating. You become calm, confident, selective, and consistent. A winning trader's mindset is built slowly, intentionally, and patiently. But once it is built, it becomes your greatest advantage, an advantage that cannot be taken away from you. If you can control your emotions, you can control your decisions. If you can control your decisions, you can control your results. And when you control your results, you become the trader you were meant to be.